Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with the VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Federal Agriculture MTGCP, ticker is AGM. Price at the point of filing is $126.82. Please write down in the comments below if you have invested, will invest, or why not into Federal Agriculture MTGCP. I'm actually interested in that and would love to read your reviews. Description. I wrote up AGM in 2009, and today I'm writing it up again for a different reason. And looking back, there was no reason to sell. Back then, it was a bargain basement price at a cycle bottom with fixable, non-core short-term issues. Since then, it has grown at an above average rate, and I believe we could be on the cusp of a significant rise in the stock price for macro reasons. Just as a quick reminder / intro, AGM is a provider of agricultural loan products and services with a mandate to increase the availability and affordability of credit in rural areas. The company was started in 1988 because there was an agriculture boom in the 70s that went bust in the 80s. A lot of over-indebted farmers left their banks and went under, and the farm credit system reported a loss for a few years. AGM provides a secondary market so that bankers can land in the AG space and thus compete with bigger banks. The farm credit system, insurance companies, specialized lenders, cooperatives, and private sources of capital. Now, a cycle of rising commodity prices is starting, but this time, Farmer Mac exists as an established component of the system. They will benefit. Here are the main products the company offers today: purchasing a par loans and loan participation secured by first line mortgages on eligible agricultural land and fixed buildings. Purchasing guaranteed options portions of USDA Farm Service Agency and rural development loans from the lenders that originate them. Wholesale financing, AG Vantage, low cost wholesale funding for institutions eligible agricultural assets. Farm and Ranch Credit Protection consists of two credit enhancements products for protect assets that sit on banks' balance sheets. AGM has the potential to get into more products. Because farmers have many types of loans, the company can and probably will look into offering all types so that it can do financing, package deals, and establish all encompassing relationships. Another interesting thing about AGM is they're super deep into servicing. They want to service the loans as much as possible, not just because it's good business, but because it helps them get to know the end user. Furthermore, they've been increasingly using technology for modeling and are much more sophisticated than they were in 2009. Bull thesis. The Russia versus West conflict is having a significant ongoing consequences in terms of global geopolitics and economics. A realignment is underway, one that has negatively impacted the US relationship with India, Iran, Saudi Arabia, possibly Turkey, Mexico, China, obviously Russia, and more. It's also leading to intra Europe tensions, namely decreasing patience in a couple of Eastern European countries and perhaps problems with pigs too. The main problem is economic. The world is realizing that financialization and control of financial institutions doesn't matter as much as secure supply of food and fuel. It seems increasingly likely that over the foreseeable future, many countries will feel pressure in the following areas: higher energy prices due to oil producing countries realizing they're better positioned than previously believed. This affects input costs for various people, including farmers. Higher food prices, given that food grown in Russia / Kazakhstan and perhaps other countries will be sold to the West at a lower priority level. Higher fertilizer prices. One of the main effects that we've seen in very high diesel prices, which affects farming profits quite a bit to an extent that US farmers are wondering if they'll be able to plant and or harvest economically. Farmers are also taking a pay cut on what they still are producing due to lower profit margins. Furthermore, from an internal politics point of view, government wants to prevent people from rebelling and to maintain social cohesion. One way to do that is establishing a margin of safety in terms of food and fuel. The Western world will learn that power in this new paradigm comes from low debt. high reserves of hard money and hard assets, and the ability to have a self-sustaining economy as far as the basics go: food, fuel, housing, health. It's crazy that so many medical supplies in the US come from China, for instance. Add to that the potential for any of the following: stagnating economy, possible stagflation, lack of credit because of lender uncertainty, interest rate uncertainty, a cycle of rising rates which have never been seen before in their careers, political change, turmoil, and a reversal of the trend towards globalization. Farmers are not fully ready for these types of outcomes. You can take a look at certain graphs at the link below. For example, plans for farm machinery purchases, figure 5, and see that as of the date of the study, sentiment has not shifted to reflect these realities. Link is AG Purdue Edu. Farmer sentiment plummets as production costs skyrocket. It seems like we're headed towards a situation where the government will want to make sure farmers keep producing, which will eventually mean introducing government programs that modify the financial landscape such that certain normally uneconomic projects become economic for farmers. Good old America. AGM's mission is to maintain an efficient secondary market for farm credit and other rural credit, notably taking conforming loans off of bank's balance sheet. As we know from the housing bubble, removing risk exposure from a large number of participants and transferring it to one participant provides a lot of juice. In the case of farming, should the government want to help encourage grow sustain the economy industry, they will go to AGM. The company is the only federally chartered corporation that does what it does. 5 of its 15 directors are appointed by the president with the advice and consent of the Senate. Standards for loan guarantees have been modified before and can be again at the stroke of a pen. New programs can be created. If the government wants to simulate, the infrastructure is in place, and the sector is small enough now that taxpayers won't mind. They want to eat, and this isn't as big of an expenditure as defense or healthcare. I think the commodities trend in typical American fashion will overshoot. It's even possible that in 10 to 20 years, we have a USA where tons of people have a small farm and produce their own food. A great success of transitioning to more self-sufficiency, more awareness and more organic food, and perhaps much decentralization. All courtesy of a small government-sponsored loans. But it can also be large loans to large players. Either way, this would be a bonanza for sellers of various equipment slash supply for the financial sector, and for sure, the one piece of the picture where we have a monopoly, the securitization slash guarantee business. AGM has $1 billion market cap. People aren't paying much attention to a stock like this. Once there's a real bull market in farming, this stock becomes widely followed, even though it's not a mega cap. And if we see a flow back from big cities into rural areas, AGM benefits in other ways because they also participate in the financing of animal farming as well as rural utilities. And this is not a company that will go crazy from one day to the next. It took time for FNM/FRE to become the degenerates they became. So there will be plenty of time to exit of one fears things are going too far. It's been for many years a nicely growing stock with a good dividend and a somewhat boring story. Farming will now become just a bit more sexy. More on AGM's business. In recent years, AGM has focused on technology to enhance customer experience. The main example is AG Express. Launched in October 2019, this platform is used for borrowers who have a 720 FICO and up to 55% LTV. The turnaround time is 24 hours max. Much of the time, approval comes in minutes. And there's minimal documentation. The underwriting is based mostly on people's existing profile. Also, there's no restrictions on the use of funds. This product is now AGM's most popular underwriting option. In October 2020, they doubled the max loan amount to $1.5 million. In 2021, they made the process 100% online and are adding more features to the online portal such as rate comparison and locking in a rate. In terms of the value proposition, there are many benefits to banks offered by Farmer Mac. They enable banks to do complex transactions involving multiple entities and multiple individuals with a higher loan amount. They enable the financing of 95 to 100% of someone's first land purchase because it's split up into two mortgages. The first with the bank and the second with the USDA through the Farm Service Agency. The latter tranche is purchased by AGM. They enable the borrower to get a fixed rate for 15 to 30 years. They allow banks to keep growing because as volume grows, a bank can't take loans on its own balance sheet anymore. They enable banks to offer loans that exceed their normal lending limit. Conclusion. So, how much can a stock like this rise? Usually, when there's a bubble created by government intervention or otherwise, the sector's size rises to multiples of the baseline, at the very least double. And in the case of AGM, if we get into a situation where purely private companies shy away from lending, the government sponsored place gets a disproportional share of the growth, and it's even more bullish. I'd expect at minimum 2x over the next 5 years. If there's simply more government help for farmers, which is 50% compounded, plus you get dividends, if we get all the way into a farming resource nationalism bubble, it could easily be 5 to 10x. I divide the probabilities as follows: 10% chance of a boring outcome, no government help, and everything stays the same it has been over the past years. Over the past decade. No change in farming's role in the American economy. 45% chance of government intervention, but without it turning into a bubble. 45% chance the pendulum goes all the way to the other side and we have a raging farming bull decade. Currently, the stock trades at around 10x earnings and 1.1x book. Risks. The main risk I see here is that they deal in fixed income. So, any sort of hyperinflation that takes away people's appetite for fixed income securities is going to impact AGM negatively. Also, there's simply execution risk when it comes to managing their hedges. Interest rate curves are getting interesting, but perhaps the use of adjustable rate instruments fixes much of this and keeps investors confident. Catalyst. Russia continues to pivot away from the West. Ruble keeps its strength. Other countries follow Russia's lead and the world becomes more multipolar. Deteriorating relationships with other countries. Any sort of inflation or variance in the rate of inflation. Any kind of food crisis, supply shocks, great variance in AG prices. Recession/stagnation, rates that vary a lot. Thank you very much for tuning in. See you next time. And please write down in the comments below what you think of this stock. I think it's a little too complicated for me, especially I don't know much about the agriculture sector. But it seems like a really interesting idea. And I would love to hear what you think.